A 50-year mortgage will soon be available to buy real estate. I have all the details and what you need to know about these ultra long-term loans right here in the video, so let's get right into it. All right, so first off, when was the last time you heard about a 50-year mortgage? Probably never. However, I think all of us can probably agree real estate has been on an absolute tear over the last couple of years, and as a result of that, they're going to start introducing some of these longer-term loan options to make housing more available and accessible for more people. Well, that's exactly what I want to focus on and talk about right here in the video, as well as talk about why they are offering this 50-year mortgage option, because this is actually underlying some of the major problems that we have right now. So again, that's also what I want to talk about in the video. Let's get into it and discuss all the details and the moving parts and why they are now offering 50-year loan terms. That's a long time. All right, so first off, I think all of us can probably agree a 30-year fixed-rate mortgage or even a 15-year fixed-rate mortgage are by far the most popular mortgages that you probably hear about. If you've ever gone in to get a mortgage, or if you've ever heard about anybody, a friend, a family member, somebody like this, they're probably leaning toward one of these two products. Now again, there are a lot of other loan options out there as well, but these are the two most popular products available, and most people do choose these. However, I do want to point out some new information here because now they are talking about introducing an ultra long-term mortgage, 50-year fixed rate, and of course they'll have all kinds of other options as well, 50-year adjustable rate, and all kinds of different options. But again, 50 years. That's a very long time, right? I think we can all probably agree that's nuts, right? Even a lot of people that get a 30-year fixed rate mortgage are thinking, seriously, 30 years? I got to pay on this thing? 30 years? That's like a lot of my life, right? That's a huge percentage of my life that I gotta pay on this thing. Well, now they're turning it out to possibly even 50 years. However, like I said, are they doing this out of the goodness of their heart, or is there actually some other underlying problems that we're currently dealing with? I'm going to go ahead and say it's because there are some major underlying problems here. And I want to point this out for you because it's more than just looking at the term and thinking, oh wow, they want to give us 50 years on this thing, which will make my payment like $0, and the interest rates will be very low and all kinds of other favorable terms. Yes, that will be pretty nice, but at the end of the day, why is this actually being introduced? Here's why. Because real estate prices continue to move up so significantly fast. Interest rates are also moving up, but we also know that interest rates do vary quite a bit, and historically, they'll probably just continue to go down over long periods of time. But that's the reality that we're dealing with right now. But here's the other major problem. Real wage growth, in other words, like how much people are earning on average, is not growing very fast at all. In fact, it's only growing by like 2% a year. It is not growing very fast. Here's the problem. The pace of real estate and the prices of real estate is way outpacing wage growth. As a result of that, most people cannot afford houses anymore. Because anybody that wants to afford a house, well, you sit there and you work and you work and you work, you save a bunch of money up, and then all of a sudden, a couple years later, a year, 2 years, 3 years, 5 years, 10 years later, when you finally have built up enough savings and enough of a down payment, you go into the market and you realize, wait, the $200,000 house that I wanted to buy is now $350,000, or it's now $400,000. Wait, what about the $40,000 that I have saved up? Is that going to get me my $200,000 house? No, not really. Now you need to either downgrade or you need to go back to the drawing board and start saving up more money once again. So as a result of that, even somebody that gets a 30-year fixed rate mortgage, which generally has the most favorable terms when it comes down to interest rates, they generally are very, very low, comparably and relative, but these are generally some very good rates. They're very competitive, and you can, get a lot of really good interest rates on these things. However, the problem is because real wage growth has not been keeping up with the pace of rapidly rising prices on inflation, the problem is people can't afford houses anymore. People simply cannot afford the houses anymore because prices are rising and appreciating way too fast, and coupled with rapidly rising interest rates and all of these other factors, it just shows the equation here just simply does not make any sense anymore, right? Prices are getting away from people, interest rates are moving up, and real wage growth is just hanging out, doing the same old thing, nothing, right? People aren't even keeping up with real inflation right now. So Here's the whole idea behind this. By introducing a 50-year fixed rate mortgage, or just straight up a 50-year mortgage, basically what this is doing, it is lowering the payment significantly, right? So let's just say, for example, let's just say that somebody getting a 30-year fixed rate mortgage, maybe the payment was, say, $1,500 a month. Well, by introducing a 50-year mortgage, now you could be looking at a payment maybe around, maybe $1,000, maybe $900, maybe $950. So it significantly reduces the payment because now you're paying on that, say, $200,000 mortgage over, say, 50 years versus over 30 years. It's going to dramatically lower that payment. So kind of interesting to see how this works. So rather than actually doing something as in like lowering the prices on real estate, which again, that is dictated by the market will indicate and dictate the price of any asset class like that, whether it's stocks, crypto, real estate. Literally all markets are actually pegged by supply and demand. Well, that's the same thing with the real estate market. As a result of that, the market ebb and flows just like any other market, the stock market, anything else like that. But the fact of the matter is, when prices do go up on real estate, they're outpacing wages significantly. So they're now thinking about introducing these 50-year ultra long-term mortgages so that when people want to go and buy a house, now people can actually afford houses now, because rather than trying to adjust prices to actually fit wages and adjust wages to fit prices. Again, more on that here in just a second, because that's another problem going forward as well. Now they're offering these longer term loan options so that when you want to go and buy a house, maybe somebody before couldn't afford, say, a $1,500 per month payment, but now they can afford a $950 payment or a $1,000 payment. Does this make sense? So that's why they're doing it. This is the way that banks and big institutions and things like this, mortgage brokers, this is how they can now get more clients into houses, because all of a sudden, if there's a 50-year mortgage option, guess what? A lot more people can now buy houses, right? But here's one more thing that I want to point out as well. If this were to be the case, then there's just going to be a lot more demand on the lower priced houses. And guess what happens when we have an imbalance of supply and demand? Guess what happens? It drives prices higher, right? So again, this isn't really fixing the problem. Other than that, it might be fixing it for a very short period of time until we get a bunch of people coming out with these longer term options on loans, and then all of a sudden driving prices once again out of their price range. Kind of see how this is a problem here? Yeah. Well, one more thing I want to throw out there as well. So another issue that they're possibly looking at is, why don't we just raise wages? Well, yeah, that'd be a good solution as well. However, here's the problem. And again, I am not saying that we shouldn't raise wages and give everybody a livable wage. I'm not saying that at all. But here's what the studies have all shown. When we go out and we raise wages, the problem is, again, now everybody just has more money. So when everybody has more money, guess what we do? We go out and we bid the prices up on things. We bid the prices up on real estate. We bid the prices up on the things in the stores, right? So ultimately, it just means more demand because now people have more money. They're flush with money now, or it feels like it anyway, because we got a little raise on our income. And all of a sudden, people have more money, and now they can bid those prices up, right? So it doesn't really help the situation. By giving everybody more money, it's great, but at the end of the day, it doesn't really help the situation because it just drives prices higher. Make sense? So anyway, kind of an interesting situation right now, but this is the reality of the situation going on right now. So the 30-year fixed rate mortgage, even though it's very popular, it might be hitting the road here relatively soon. Now, don't get me wrong. The 30-year fixed rate mortgage is not going anywhere. It's been around forever, and it will continue to be around forever. However, there may be a more appealing approach going forward, which could be a 50-year mortgage. Now, this will this will lower payments significantly on a monthly basis, but here's what also is interesting. I've been reading some information about this, and they're anticipating in the event that people start getting these 50-year fixed rate mortgages, it's basically just going to be like a perpetual rent from the bank. So basically somebody's going to pay on this 50-year mortgage throughout their entire life, and then eventually they're probably going to pass it on, as in the mortgage and the property, onto their heirs, because 50 years is a very long time. And statistically, when most people buy their homes, well, you know what I mean? 50 years is going to encompass pretty much their entire life. So it's kind of interesting because the articles are saying that this is ultimately just going to turn into a big situation where people are just basically lifelong renters from the bank, basically paying on a mortgage forever their entire life. I don't know. Seems kind of interesting, right? So, of course, I'll keep you posted as I do get more details on this or anything else right now in regards to all the markets or what's going on right here, right now. So again, thanks so much for joining me. Please make sure to subscribe down below if you haven't done so yet. Share the video with your friends, family, social media, and go back and check out some of the other thousands of videos right here on the channel. There's a lot of great content out there. I'm watching everything very closely. So go back and watch those videos. And of course, leave your comments, questions, and feedback down below. Thanks again. I really do appreciate it. Until next time, have a good one, and I'll catch you again later in the next video.